Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Tesla shares soar as investors cheer Elon Musk's promise of making cheaper cars sooner. Investors overlook a big miss on earnings. Stocks gain in Asia following a tech-fueled rally on Wall Street. A $69 billion sale of two-year treasuries lures solid buyer demand, even as a 5% coupon proves elusive. Plus, President Biden says fresh U.S. military aid will start flowing to Ukraine within days after the Senate passes a long-delayed aid package. Let's check in on some of the earnings that are breaking across the terminal right now. We go to Volvo Cars with the focus, of course, on the competition, the price cutting, the cost cutting at that company. We know that EV sales overall, of course, across Europe have been slowing in terms of the growth of those EV sales. Volvo Cars sees full year revenue at least of up 15%. So they see full year revenue growing at least 15%. That's pushing forward. In terms of the first quarter, the revenue is a miss for Volvo Cars, logging 93.8, so 94 billion Swedish krona in the first quarter in terms of revenue, below the estimates that had seen just shy of 100 billion Swedish krona. In terms of operating income for the first quarter, that number came in again below the estimates, 4.71 billion Swedish krona, 4.7 billion versus the estimates of just shy of 6 billion. The margin as well, also a miss, 5% versus just shy of 5.7%. But again, the full year revenue still seeing that growth of up 15% for Volvo Cars. That is a company we will watch, of course, at the open as we continue to contend with a little bit of softness in terms of that EV demand. Again, the competition from China, the price cutting, the competition from the likes of Tesla as well. A redhead as well on Roche. We'll get to that shortly, but just to flag that we're going to be speaking to the Volvo Car CEO and President, Jim Rowan. That conversation at 7:15 a.m. UK time. And on Roche, the redhead crossing for this Swiss drug maker. First quarter sales coming in just shy of the estimates, 14.4 billion Swiss francs. The estimates had been for 14.5 billion. So just a small miss coming through for the first quarter. We know that in terms of the COVID-19 input, that has slowed the sales, basically that business fading last year. So we know that that could have potentially been a drag as well. We look for more details on this, of course. And then the Swissy, the impact of that strong Swiss franc is a factor to be looking at as well. They're confirming their outlook for 2024. Not a big surprise there. That was expected. But again, the outlook confirmed by Roche for 2024. And in terms of the breakdown of some of the individual drugs, we'll get the details on that. But the top line is first quarter sales, just slight miss there for Roche in the first quarter. Let's check in on these markets because the earnings story is part of the package here, but there's a number of positive catalysts coming through and feeding into the upside that we're seeing. The good news is bad news, or the bad news is good news when it comes to US data, with business activity slowing, and that suggests that there is still a window for the Fed to cut at some point this year. Then there was the Treasury auction that was very well received as well, and then the earnings story and the optimism in terms of the outlook coming through from Tesla. The earnings not as bad as they could have been was the line from some analysts out there, and then they're pushing forward in terms of that potential cheaper model. We'll break that story down for you, of course, in detail through this show. European futures pointing high by 0.4%. FTSE 100 looking to add 48 points. Commodities getting a lift as well. Copper and iron ore, so keep that in mind. S&P futures back above 5,100. Looking to gain 0.3% after two solid days in terms of the upside that we've seen for the S&P. Nasdaq futures currently pointing higher by 0.7%. Let's flip the board and look cross asset then, with a focus on the Treasury curve, given that that two-year auction yesterday in the US was well received. 4.92 on the two-year right now. Euro dollar at 107, a little flat essentially for the single currency, but back above that 106 level. Brent $88 a barrel, up just 0.1%, and iron ore rallying today on question marks about supply, close to 5% on iron ore. So we'll be watching basic resources and the miners at the open. Let's cross over to Asia now and see how that market is shaping up. Optimism there as well. Avril Hong standing by for us in Singapore. Avril.
Optimism indeed. As we saw last week, though, remember how it was very tentative in the Asian markets, and we saw the infotech sector badly beaten up. It was that confluence of factors, no thanks to the Fed narrative, Middle East tensions, and then TSMC's guidance. Today, Asian markets are getting their groove back on. The infotech sector is the top performing one. we already knew coming into this week that earnings were going to be a key test. So far, what we're hearing from Tesla and Texas Instruments as well is providing that sense of promise and optimism to the markets. We're seeing the Nikkei, Kospi, TAIEX all moving higher. And the Hang Seng also well in the green for another session, erasing the declines for the year. Let's take a look at what this is doing to the FX space. There is a read-through from that tech rally, flip the board, as the South Korean won is the top performing currency in the region today amid the stock market inflows. Taiwan dollar also doing well, keeping an eye on the Aussie after a hot inflation print. Now, we are also keeping an eye on the yen weakness despite the Bloomberg dollar index softer for a third session. It is moving towards that 155 level on dollar yen. As the BOJ heads into that two-day policy meeting tomorrow, you can bet that yen weakness will figure heavily into the equation and the conversations about imported inflation. Flip the board again. I want to take you to the chip stocks in the region after Texas Instruments gave that solid forecast. It is, of course, seen as a bellwether for the sector. So the South Korean, the Japanese chip-related stocks, they're moving on up. Let's flip the board again. Take a look at what we're seeing among the EV-related stocks, thanks to Tesla allaying some concerns about its strategy by saying it's going to push out these cheaper models sooner, and it's taking along for the ride its suppliers as well as some of its peers. These two listed in Hong Kong, Tom.
OK, as Avril says, the Asian market's getting their groove back. Avril Hong in Singapore, thank you very much indeed for the breakdown there in terms of the Asian market action. And as she says, tying that to the Tesla story, at least to some extent on the earnings story. Tesla shares then surging after it said that it is accelerating the launch of more affordable models, following a decline in its profit margins and sales. The EV maker says it aims to start production as soon as this year, well ahead of the late 2025 timing that had previously been pledged by the company. Let's bring in Robert Lee, standing by now, our senior analyst for Bloomberg Intelligence, joining us with the details, the deep dive on the earnings story when it comes to Tesla and pushing ahead as well. And arguably, Rob, it was all about the call. Rather than the numbers that came through for the earnings, it was the call and the conversation with Musk that seemed to alleviate those investor concerns.
No, I think you're absolutely right. I mean, the market anticipated weak results, and it truly got those. But those are in the rearview mirror now, to use a driving pun. It's all about looking forward, and I think investors gained a bit of confidence on the strategic direction of the company, given that it now seems to be focusing more on the mass market and returning to their original stated aim to go into lower price EVs. So the market's taken that quite positively. Robo-taxis, etc., are still a potential focus, but I think most people would agree that's a longer-term opportunity with various question marks as to when these things really become viable. And then secondly, the Cybertruck, which is a low-volume product for them at the moment, Tesla confirmed, or Elon Musk, I should say, confirmed that production is ramping up faster than expected on that. And that gave the market some confidence that that particular business line could potentially reach break-even as soon as Q4. So those were two main incremental positives that the market didn't really see coming. And that's why you're getting both a bit of a short squeeze and, you know, a rally in the aftermarket.
How is that tying in then to the earnings outlook for Tesla and how that's adjusted, Rob?
I guess analysts are still penciling away on that, and so we've yet to see the update on the consensus numbers. But arguably, the numbers, given they were baking in very low expectations, could come up a little bit for this year. And also looking at the numbers reported, the gross margin also came a little bit higher than expected. And Tesla has clearly been cutting costs with the staff layoffs, etc. So there is maybe some incremental upside on earnings estimates in the near term. And as I said, I think most people would agree that the mass market opportunity is both nearer term to them. And as you said in your intro, they're looking to roll that out faster than expected. But that's a more near-term opportunity versus robo-taxis, which really, I would argue, are still in the realms of science fiction to some degree. There's been some interesting trials, but that technology is nowhere near becoming, mass deployed at the moment. So the lower-priced EVs is a nearer-term market opportunity for them that could well generate some medium-term upsides to their earnings estimates, assuming they execute in a very, very competitive market.
OK, Rob Lee on the near-term and then longer-term prospects for Tesla. Senior analyst at Bloomberg Intelligence. Thank you for the analysis, Rob, as ever. Now to the US and the macro, particularly when it comes to what is happening on the fiscal front. The US Treasury's hefty $69 billion sale of 2-year notes lured solid buyer demand. There were some questions as to whether or not that would happen, but that, even as the much-desired 5% coupon proved elusive. You're close to that, but you didn't cross the 5% level. It comes as business activity, meanwhile, in the US expanded at its slowest pace in 4 months. The jobs component also softened within that data print. Bloomberg MLive strategist Mary Nicola joins us for the breakdown. Mary, let's start with the Treasury markets, or at least the auction, and to what extent this was well absorbed by the market. A positive, it seems.
Yeah, absolutely. I remember yesterday I was on your show saying that there were headwinds for the 2-year auction, but obviously, the 5% coupon is quite attractive. So it could signal that we could see a good one for the 5-year and the 7-year today, but it'll still be on what the run-up looks like heading into these auctions and how treasuries are playing out. But it's the momentum for treasuries right now looks still a bit precarious when you have GDP data coming out, and of course you've got PCE on Friday as well.
And meanwhile, Australia, a reminder that inflation isn't just sticky in the US, it's sticky in Australia. And it seems the markets are starting to push back in that jurisdiction as well, the prospect of cuts from the central bank there. Talk to us about the relevance of that inflation data out of Australia.
Absolutely. It just resonates the higher for longer mantra. Not only is it coming from the Fed, but it's also from the RBA. And it just shows the stickiness of inflation more globally. And of course, then you have the resilience in oil prices. Oil prices still remain high. So there's still some upside risks to inflation, which could keep a lot of central banks on the sidelines for now. RBA is a perfect case. Heading into the CPI data, swap markets were looking about a 70% chance of a cut. Now they're pricing in about less than a 50% chance of a cut for this year. So a lot of these the inflation numbers are coming out showing that these central banks really have to be a bit more careful before even considering these rate cuts.
Yeah, the hard work that needs to be put in to get through that last mile when it comes to inflation with that 3+% handle in terms of CPI. I think it was 3.6% on Australia, wasn't it? MLive strategist Mary Nicola, thank you very much indeed. Walking through the Treasury auction in the US and, of course, that inflation print and how that resonates globally out of Australia. Here's what else to think about then. Day ahead, 7 a.m. UK time. Of course, it is a big week in terms of bank earnings across the Eurozone, here in the UK as well. 7 a.m. UK time, we're going to get Lloyds Banking Group earnings. So think about that in terms of scrutinising what is happening in the UK banking space. 9 a.m. UK time as well. The German IFO business climate is expected to tick up. It's expected to build out the picture of a modestly improving German economy. That detail and that data out at 9 a.m. UK time. And, of course, on the earnings front, another big day. We're going to get Boeing in the US, of course, Meta, and to what extent the AI catalyst is feeding through into that company, IBM as well, and Ford on the autos front. All of those earnings coming out later in the day stateside. Coming up, US President Joe Biden expected to sign a long-delayed aid package into law today, clearing the way for resumed weapons shipments to Ukraine as soon as this week. The details are next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, US President Joe Biden is expected to sign a long-delayed $95 billion emergency aid package for Ukraine, Israel and Taiwan into law as soon as today. It clears the way for resumed shipments of weapons to Ukraine this week. Let's bring in Bloomberg Markets Today anchor Kriti Gupta for the details on this. So, Kriti, what can Ukraine expect from this?
So replenishment of air defense systems is the big one here. We've already had Rishi Sunak, for example, in the last 24 hours talk about giving long-range missiles in particular. So the ammunition is coming from other parts of the world, but the actual machinery, the actual systems, the actual air defense systems, drone warfare, for example, that's the part that's getting replenished from this aid package. About $14 billion of U.S. defense getting added to that. $13 billion when it comes to the actual machinery, the equipments, the firearms there. You have about $9.5 billion, though, in forgivable loans. I think this part is a really key piece of the equation, simply from a political standpoint, one, because this was President Trump's initial idea, and it actually brought on some of the kind of more right-wing congressional representatives onto this bill. But it also means that it has to do things with more things like aid, for example, in parts of communities. It's not necessarily related directly to the defense story in Ukraine. It has a little bit more to do with economic assistance. So that is the key parts of the Ukrainian bill at a time, by the way, when the ports, for example, are coming back into focus. You're really keeping an eye on things like grain shipments out of Ukraine and what that looks like. It was certainly under a lot of pressure as Russia was making ground.
And arguably, the Ukraine segment of this bill was the most important. But there was a lot in there, including additional sanctions on Iran. Iran is already heavily sanctioned, of course. So do these additional sanctions actually move the dial?
In theory, they should. And Javier Blas over at Bloomberg Opinion made a great point that it's actually not about more added sanctions, it's about the enforcement of the sanctions. The question is, how much money does it add? And I think that the fine print is really important here, because it's not just about targeting refineries or ports or vessels for Iran, which is already being done in a lot of ways, by the way. It's targeting the financial infrastructure that ends up with a lot of Iranian crude into places like China, for example. Again, Javier Blas, I love his column in this week, where he said that a lot of that output is being kind of branded as Malaysian crude instead and ending up in China. What's important here is that this bill now targets that financial infrastructure, the banks, the financial institutions that really carry out some of those trades. When it means for the oil price, though, Eurasia Group saying that stricter enforcement of those sanctions, not just passing it, would add $2 to $3 per barrel on top of a $90 baseline. Again, it comes with the implication that it has to be stricter enforcement, something that the Biden administration has been had a lot of pushback on, that they haven't been tough enough. But even the White House saying that they're okay with doing this time around. All
about enforcement. Amrita Sen telling us yesterday as well that enforcement hasn't been there up until this point. So we watch that, as you say. Meanwhile, the divestment of TikTok from ByteDance, that will be signed into law. They have a period of time to work through that. Legal challenges. What's next?
Well, it doesn't happen as quickly as perhaps it has in the past, where TikTok just disappears from the App Store or Google Play or whatever. It is being already a hotly contested issue. You have the leadership over at ByteDance in particular in China, but also at TikTok as well, saying we're going to put this up in the courts. This is a long legal battle if indeed the United States is able to pass this bill, which is looking like, but it won't immediately disappear from everyday use. The concern here, of course, is the algorithm. You've made the point that this is China's hardline as well. It looks like it's the United States' hardline as well. I think what we're looking for ahead is a very long legal battle that will ultimately end up in the Supreme Court. Yeah, 170 million users or so in the US will be looking at that as well, monitoring that. Kriti, thank you very much indeed for the breakdown of the importance, of course, of this bill as it clears the Senate hurdle and will be heading to the president's desk, where, of course, he says he will sign it. Now, coming up, Boeing prepares to release results, with analysts watching, of course, for the cash burn in the wake of its MAX 7 crisis, the challenges for Boeing and how that is all feeding in to those earnings. We're going to set you up with the preview for that. Stay with us. This is Bloomberg.
We believe for the next 5 years to focus on South Africa. Like I said, there's the business banking, there's insurance, there's how do you optimize 22 million clients? How do you create the ecosystem for 22 million clients? And then we've got Everfin that operates in Mexico, Spain, Czech, Poland, and Latvia. It's an online lending business. And how do you transform that into a bank over time? And how do you then take the Capitec brand that we've built, a digital platform, how do you take that international? So that's what we believe is the long-term plan with Everfin.
And that was the CEO of South African lender, Capitec Bank, speaking to Bloomberg's Jennifer Dabbert-Saja. And Jennifer will be leading, of course, our special coverage of South Africa's elections on next Friday's Africa Amplified, right here on Bloomberg TV. So tune in for that as well. Back to the earnings story now. And Boeing's cash burn will be in focus when it reports earnings later today. The plane maker is engulfed, of course, in a crisis involving its main source of revenue, the 737 MAX jet. Let's get more then from Bloomberg's Sid Phillip, who covers all of this for us in great detail. Sid, what are you and the team, what are investors going to be looking for then from Boeing's results?
Morning, Tom. So what investors are really looking for from Boeing is about their cash flow and their cash burn this quarter, because essentially there's an estimate that they may have burned through as much as $4 billion in cash and also taken basically $4 billion in debt. So that would have reduced their available cash by almost half. And that's sort of really a big concern to see what their cash burn looks like and how they can sort of get their cash flow and get cash back towards the estimate that they had at the start of the year before the blowout on the airplane.
OK, so the cash flow and the cash burn clearly in focus, under the lens for investors and you and the team. What about the moves from regulators around Boeing? How consequential have they been? What action have regulators been taking?
Yes, the regulators have obviously put Boeing under lots of scrutiny because of the MAX 9 door plug blowout in early January on the Alaska Airlines plane, and that's really been a big concern for Boeing's production, because regulators they've restricted them from ramping up production on the 737 MAX. They've also sort of demanded lots of audits, and they've done lots of various quality checks, and that's really had an impact on basically deliveries. And so Boeing isn't able to deliver as many planes to airlines, and as a result, they're basically hamstrung in terms of being able to sort of ramp up production at a time when demand is really soaring.
And Sid, get us up to speed in terms of the steps that Boeing is taking to kind of address these multitude of issues.
So Boeing's taken a wide range of measures, including the fact that they've announced a sweeping management change with the CEO stepping down at the end of the year, the chairman stepping down, and also they replaced the head of the commercial airplanes unit. So they've announced wide leadership changes. They've also announced the fact that they are looking at acquiring Spirit Aerosystems, which is an important supplier to Boeing and which makes 70% of the 737 MAX fuselage. And so they've announced various measures, and now it's really a question of implementation. And also investors will be looking at questions about who the next CEO is going to be, what the board is looking for, and essentially where Boeing goes from here.
OK, Bloomberg's Sid Phillip setting us up in terms of the preview for those Boeing earnings. Clearly, a lot of questions still need to be answered, whether it's the executive team at Boeing, of course, the changes adjusting to some of these challenges, and the cash flow as well. The cash burn clearly going to be in focus for investors. Sid, thank you very much indeed. Don't miss our interview, by the way, with the CEO of their competitor, Airbus, Guillaume Faury. That is tomorrow. That interview, of course, well worth tuning in for. Let's check in on the futures. And there, a number of catalysts coming to the fore to push us up in terms of setting us up for a positive day across the equities space. We've had a solid handover from Asia and, of course, the gains coming through from the US. European futures pointing higher by 0.5%. The earnings story is there. The fact that the Treasury auction in the US was well received. FTSE 100 futures as well, pointing up by 0.6%. The commodity story, particularly the likes of copper and iron ore, will play into that. DAX futures over in Germany looking to add 0.4%. Coming up, Tesla's earnings miss, but it's overtaken by Elon Musk's new plan to deliver cheaper cars faster. He's relatively optimistic on the prospects. We get the details on that key story. That is next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Tesla shares soar as investors cheer Elon Musk's promise of making cheaper cars sooner. Investors overlooking a big miss on the earnings. Stocks gain in Asia following a tech-fueled rally on Wall Street. A $69 billion sale of two-year treasuries lures solid buyer demand, even as a 5% coupon proves elusive. Plus, European earnings gear up with Volvo car missing revenue estimates for the first quarter, and French luxury maker Kering comes under pressure after Gucci sales tumble on weak demand in China. Let's check in on these markets then. In terms of the earnings pitch, a little bit mixed when it comes to Europe, but the catalyst coming through from the US, certainly you've had 2 straight days of solid upside for the S&P, logging gains of 1.2% yesterday, the best back-to-back rally for the S&P in 2 months. Nasdaq as well, the Nasdaq 100 ending up 1.5%. European futures pointed to gains of 0.5%. The FTSE 100, keep an eye on copper and iron ore prices and basic resources. That index pointing higher by 0.6%. S&P futures looking to build on the gains of yesterday, 5,126, looking to add 19 points. Nasdaq futures 17,734, looking to add 0.7%. Yes, the optimism around Tesla, despite the lackluster earnings. It's the outlook and the guidance coming through from Elon Musk. But also the semiconductor space getting a lift this morning in Asia, and that could filter through to Europe as well on the back of what we saw from Texas Instruments and an upgraded or at least more positive outlook coming through, of course, from that key semiconductor maker. Let's flip the board and look cross-asset as well for you. The US 2-year in focus for us, 492, well received in terms of that $69 billion auction. So some relief there across the treasury markets yesterday. Euro dollar 107, Brent at $88 a barrel, up 0.2%. Iron ore soaring just shy of 5%. Copper also getting a lift as well. A redhead crossing right now when it comes to the real estate story of China. And of course, iron ore ties in to that as well. Interestingly, this is around Country Garden and the news coming through that they have negotiated to extend their yuan bonds in terms of the payment on those yuan bonds to avoid a first local default. For the context, Country Garden, one of the biggest real estate companies in China. It's a brand that's very, very well known. They did default on their dollar bonds. That default has happened about a year ago. It's the local bonds, the yuan bonds, on which they have avoided their first local default. So a bit of relief coming through in terms of the ability for this key real estate company in China to negotiate its debt payments at a time, of course, when you continue to see pressure across the real estate market in China. An 83% slump in home sales just last month. And that cash crunch is, of course, proving extremely painful for these countries. But a bit of relief coming through for Country Garden. We're going to watch the local bonds on the back of that. Let's get more on Tesla then in terms of the earnings. Shares surging, as I mentioned, in late trade after it promised to accelerate the launch of more affordable models following a decline in first quarter profit margins and sales. Let's bring in Bloomberg Asia transport reporter Danny Lee. Standing by for us in Beijing. Danny, tell us about what Elon Musk said during the earnings call that led to this optimism amongst investors.
Yeah, Elon Musk looking to bring forward, and Tesla's looking to accelerate the production or the unveiling of what should be a new lower cost set of EV models. And this is really important for Tesla and its future growth story, and particularly as around 2024, which Tesla faces notably lower growth. And so therefore, by having these potentially new and more affordable models out there, it helps potentially refresh a lineup that has become stale, a lineup that is also very small. And so investors are broadly happier with this accelerated timeline. Something that was going to happen at the end of next year in 2025 could come as soon as this year or early next. So this is potentially very, very positive. But unfortunately, there is still a lot of detail that is yet to be really being clarified by Elon Musk. And he's saying, wait until August when we will have an announcement on something related to a robotaxi and whether that could involve one of the things that could be low cost and help to drive and revive this slumping stock performance.
Yeah, and it just comes down to implementation now. The key question of whether or not they can actually implement around that sped up time frame. Really interesting that Danny joining us out of Beijing, where of course the competition out of China has been one of the key factors, key challenges for Elon Musk and Tesla. The first quarter, a mixed bag then, Danny. What stood out to you?
Yeah, I think just across the range of the metrics that we were looking at, everything that had fallen in terms of, or missed estimates rather. And so this was not too much of a surprise given what we saw coming based on weak first quarter delivery numbers. And so therefore, with what Elon Musk has been trying to do to kind of turn this ship around on Tesla, in fact, the fact that they had made its biggest workforce cut last week ever, and therefore it's also really going to laser in on on further cost cuts going forward. So that for me was the most interesting point, aside from this accelerated announcement on low-cost EV production, and so therefore it could put it in better financial standing going forward.
OK, Bloomberg Asia transport reporter Danny Lee giving us the context around those Tesla earnings. Thank you very much indeed, joining us out of Beijing. Now, another of the Magnificent Seven in action later today, with Meta reporting first quarter earnings today. The company's generative AI tools are expected to continue strengthening its position. Arguably, Meta was ahead of the curve when it comes to building out AI. Let's get more from Matt Bloxham from Bloomberg Intelligence. Matt, what are you in the street going to be looking for then?
Yeah, I think that M word is important, magnificent. I think people are expecting these to be really good results. They had a bit of a lull 12 months or so ago, but they've kind of really come out of that. The market's looking for about something like 26% year-on-year revenue growth, a really big improvement in profitability. And I said some of that's coming from AI. They're really using those tools effectively to improve ad impressions. Advertisers saying, yeah, we want to advertise on Instagram, on Facebook, because these tools are helping us to reach customers and actually sell product to them. So that's really helping them. Obviously, in this kind of whole news around TikTok's been a big shadow for Meta for a long time now. Reels, which was the Instagram kind of rival to TikTok, is starting to get traction too. So that's helping. So generally, I think when the street looks at these results, they're expecting to see really positive numbers. I don't think they're going to disappoint, but obviously the share prices may be reflecting that already. And obviously another thing that people are going to be looking at is the forward guide. So for next quarter, where is Meta going to kind of position revenue expectations? The street's looking for about $38 billion of revenue. I think a lot of people are expecting maybe that could be a little bit conservative, so we'll see.
OK, $38 billion of revenue expected by the street. You touch on TikTok. It very likely is going to face, at least on paper, a ban, or at least being divested from ByteDance. The president's going to sign that bill, it seems, later today. There's a legal process to work through, of course, and it's very uncertain as to whether or not you'll actually see that ban in consequence. But it could prove consequential for Meta.
Yeah, it could. I say that the clock starts ticking on this 270-day timeline, in theory at least, maybe later today. As you said, there's lots of kind of resistance expected from ByteDance, all sorts of legal avenues they can pursue to at least delay this from it being implemented, perhaps by up to a year, possibly longer. But yeah, I think if ultimately TikTok in the US is either sold or it has to be kind of closed down, then for sure Meta is going to be one of the principal beneficiaries of that, because it's such a big rival to Instagram that a lot of content creators are going to have to think, well, maybe we're going to have to go back to Instagram and use that as our main platform, and it's going to give a big boost to Reels. Obviously, lots of different things could happen in the next 270 days, but definitely I'm sure there's a lot of work going on within Meta to make sure they're well positioned, and they should be a big beneficiary of any ban.
Yeah, the prospect for them arguably is going to be tantalising, isn't it, Matt? Thank you very much indeed, setting us up, of course, for the importance of the Meta earnings coming out of the US and what to scrutinise in terms of those numbers. Matt Bloxham, of course, from Bloomberg Intelligence with a deep dive there. Thank you. Now for some of the other stories making news today. Bloomberg understands that IBM is in advanced talks to acquire software company HashiCorp, with a possible agreement coming as soon as today. HashiCorp shares jumped on the news, posting their biggest one-day gain in more than 2 years, giving the San Francisco-based company a market value of $5.8 billion US. IBM reporting later today, by the way. Visa shares, meanwhile, gaining in extended trading after the company reported a profit beat. The payments giant says adjusted net income for the fiscal second quarter rose 17% to over $5 billion. US credit card spending growing over 6% from a year earlier, with worldwide payments volume rising 8%. Heineken, the drinks maker, of course, due to report in the next half hour or so, expected to benefit from an earlier Easter. So some of those seasonal changes. For a preview on the numbers with this company, I'm joined by Bloomberg's Dasha Afanasieva for the details. Dasha, what are we expecting?
Morning. So I think with Heineken, like a lot of the consumer goods companies, last year was a really difficult year because they had contracting volumes. And in this quarter, Heineken's actually expecting to come back to growing volumes, and sales are expected to grow about 6%. So I think the key thing to look for is their growth driven more by price or by volume? And the balance of that will kind of tell us whether Heineken is going to be able to claw back its margin.
OK, the price versus volume split is going to be important then. And in terms of the outlook, a lot of analysts say, look, it's less about the earnings and more about the outlook now. What is the expected outlook for this company?
Right, yeah. So I think that the expectation is that it is going to grow volume and also grow sales this year. And I think that the margin is expected to come back too, and it's expected to sort of increase profitability and also find ways to claw back that raw material costs that it lost last year.
OK, Dasha, thank you very much indeed, setting us up for the Heineken earnings, of course, dropping potentially in the next 20 minutes or so. The volumes question, the pricing question, input costs, of course, and what's happening across their Africa business is all going to be in and under the lens for us. Thank you. Here's what else to watch out for then today. You're going to get those earnings, of course, crossing imminently from Heineken. 10:30 a.m. then, after that, UK time, Germany will be coming through with a 10-year auction for €4 billion. So we're going to be scrutinising that. 1 p.m. London time, ASML. That AGM begins. Really, really important, of course. The most important, arguably the most important European tech company, and changes at the top of the executive team as well. The CEO stepping down and making way for a new CEO. Christophe Fouquet will be taking over. 6 p.m. UK time, meanwhile, the US is going to come through with that 5-year auction of $70 billion worth of 5-year notes, or 5-year treasuries, as I say, after the 2-year treasuries were well received. That auction well received yesterday. Is this the market that's feeling indigestion, or will it be well received as well? Rishi Sunak, meanwhile, the UK Prime Minister, visiting Germany. He continues his European tour. Anthony Blinken, the US Secretary of State, is arriving in China later today, expected to touch down in Shanghai. He's got a message or two for his Chinese counterparts. Later, US earnings, of course. IBM, Boeing, we set you up with that one. Ford Motor, and as we've been discussing, Meta, with the focus on the AI catalyst. Coming up, luxury spending going out of style in China as the economy, of course, continues to struggle. We're going to check in on how that is affecting the world's biggest fashion brands, including Kering, after Gucci sales tumbled on weak demand. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. We bring you the earnings, of course, as they break. Eni, the Italian oil and gas major, coming through with first quarter adjusted net income that comes in just marginally above the estimates, just by a hair, €1.58 billion. The estimates had been for $1.57 billion. We know that the expectation was that the gas division, the gas unit of this business, would be performing relatively badly within this quarter, and it would be the downstream part that would do the heavy lifting. First quarter production on that question, 1.74 million barrels of oil. The estimates had been for 1.69, so production coming in slightly higher than expected. Exploration and production adjusted operating profit, by the way, coming in at 3.32 billion. But the redhead across the terminal for Eni, adjusted net coming in just marginally above the estimates at 1.58 billion euros. Now to the luxury space, where Kering is warning that profit will plunge in the first half of the year after wealthy shoppers curbed spending on Gucci products. Comparable sales at Gucci tumbled 18% in the first quarter on tepid demand in China. Joining us for the details is Deborah Aitken now from Bloomberg Intelligence. What is causing this deeper decline at Gucci then, Deborah?
Well, so many different things, but
where to start?
Yeah, we start with the fact that the carryover stock isn't working, that the product coming from New Creative, Desano, is only 7% of it is in stores, and it's only in Gucci-owned stores. It's not in the wholesale stores. And then also the fact that they're trying to really push a clean-up. There's so much going on within the brand overall, and we should see improvement in about 3Q. But, that is going to make it much worse for 2024 overall versus consensus.
OK, well, on that pushing forward then and that outlook and what we learnt from the earnings and the earnings call over the last day or so and how that informs your view about the second half, what is your expectation about how challenging it will be, or if they can overcome these obstacles by the second half of this year?
Mm-hmm. So the company has guided that the second half, so for the first half, for operating profit, they look for it being down 40 to 45%. Now, against this pre-release sales number for -10 for the company, for Kering, and nearer -20 came in -18 for Gucci, as you said, they were looking at consensus was expecting operating to be down 21%. So they're guiding 40 to 45. Let's take the back end of that. And in the second half, well, for Q2, they're saying there's no pickup. for Gucci and for other brands, for the sector overall. There's no real pickup in spend in Q2 versus Q1, so another soft quarter, and softer than was expected at the beginning of the year. And what does that do then? It probably means we get about 100 basis points improvement on the margin, but from a lower base. So we're going to see margins tumble. And the 30% margin that they'd forecast, around 30% for Gucci, just isn't going to hold. We're going to see those numbers come down too.
OK, so that 30% margin looks vulnerable at this point. Chinese customers turning their back on this brand, to some extent at least. What is the read across to the broader industry? It's a little bit more granular, isn't it? That's what came through from the call. It's not just a one-size-fits-all when it comes to the Chinese consumer. The Chinese consumers being a little bit, putting a little more scrutiny into what they buy.
So I think if we go back to the portfolio of Kering overall, Gucci is just, in terms of brand perception, is in the wrong place, and it is taking longer to fix. And it needs to do more at the top and the bottom end, and so Chinese shoppers are scrutinising on that. I think that overall China for them is about minus 20%, and I can compare that at the bottom end, where we have such as a L'Oreal even saying market is flat in China, but that they're growing 6%. So it's Gucci doing something wrong versus peers like LVMH and others. It's a difficult marketplace, but if your brand's in the right place, you can do well. Some of Kering's other brands are doing better. But overall, you see elsewhere what they're doing with all of the other brands. If we think about Yves Saint Laurent, that's going to be clipped by aspirational shoppers at the lower price point. Bottega Veneta is picking up. Balenciaga, you can't get a hold of their bags. They're hot again. Rodeo bags and others, nothing in stock. But everywhere, Kering is doing a cleanup whereby they're taking around 25%, or you can see on the numbers, minus 25% out of wholesale. So while you have Gucci dragging its own retail, nobody's going in their stores. Elsewhere, they're pulling out of boutiques and department stores and trying to elevate all of their brands at the same time. It's really a difficult place for them. China, otherwise, you've got to have your brand hot. And actually, even for the Gucci and all of their brand range, what we call the Chinese cohort, so moving out of the mainland, shopping elsewhere, Japan is up 16% because weakness of the yen, and we are seeing that also with Gucci. Some shopping on yen weakness for Gucci brand in Japan. But overall, still, I would say China is probably down 20% for them. OK, sounds like a mountain to climb for the Gucci brand. A rodeo handbag. I have no idea what that is. I'm going to have to Google that after the show. Deborah Aiken, thank you very much indeed, breaking down those earnings for us from Kering and, of course, the Gucci brand from Bloomberg Intelligence. Meanwhile, on fashion, Chanel CEO Lina Nair says the luxury giant plans to continue investing in China. We've just been talking about that market, despite the uneven economic recovery. Speaking exclusively to Bloomberg's Francine Lacqua, Nair spoke about the strategy behind recent price hikes.
So we raise our prices according to the inflation that we see. So they're really linked to the cost price. We've also made a commitment to price harmonization across the world, which means our clients should not experience excessive price differentials, no matter where they buy.
And how do you see the China market right now compared to the U.S. market? Because it's not that volatile, actually. You kind of have like a base that stays for quite some time.
China is a very essential market for the luxury ecosystem because of the fast adoption of luxury, because of the appreciation of refinement and sophistication. So it's a very important and essential market for us. I came back recently from China and I was really happy to see the energy and vibrancy in the market. So we continue to run our business for the long term and continue to invest in China for the long term.
OK, Chanel CEO Lina Nair speaking exclusively with Bloomberg's Francine Lacqua. And you can see that full interview on Leaders with Lacqua, 9:30 p.m. this evening in New York, and tomorrow, 6:30 p.m. here in London. There's plenty more coming up. Stay with us. This is Bloomberg.
The theme is that it's a very unbalanced economy, and that's the theme we've had for a while. So post-COVID, it's just been a very unpredictable environment for a lot of reasons. Some of those things we got really right, some of those things we got really wrong. And I think we're trying to figure out kind of what the next stage is.
Morgan Stanley's Mike Wilson there. Of course, he called the sell-off in 2022. He's very firmly and closely watched, but he's being cautious around how to make the calls around 2024, given all the uncertainty that he's outlined. In the recent couple of days, though, the strength has come through for the S&P. Yesterday, it was the semiconductors, it was the tech space, it was Nvidia lifting the index. And by the way, for the context, and this chart shows it, the best back-to-back rally for the S&P in about 2 months. Well, the earnings story continued to propel the momentum. That's the picture when it comes to the upside, and the futures are pointing to further gains today. Meanwhile, let's flip the board and have a look at what's been happening at Tesla, because the earnings were not good. But the analysts came out and said they could have been worse. They're not quite as bad as they could have been. But also, more importantly, arguably, it's about the outlook and the fact that there was a little bit of hope that was sprinkled through that earnings call coming through from Elon Musk. 21 billion on the revenue. That was a miss versus the 22 billion. EPS as well, also a miss. And a pretty sizable one at that, 45 cents versus the 52 cents. But again, the reason that after hours Tesla moved higher, and we'll see that chart shortly, is because of the views and the detail around these cheaper cars and the time frame being pulled forward. There's all sorts of questions around how they implement this and how they get this out to customers. Again, the cost cutting has come through, the challenge from the Chinese automakers, but that gained a grain of hope, certainly for investors. They jumped on that comment. Tesla then gaining after hours 13.3%. Let's flip the board and have a look at Texas Instruments as well. This has a touch point on so many different parts of the US economy, the industry, auto, space, and they are seeing a drawdown in inventories and they're seeing a turnaround, and they're coming through with a stronger guidance, stronger outlook from Texas Instruments. That read through into the Asian markets. It's likely to percolate through into the European markets as well. So the uplift there coming through from Texas Instruments that's been under pressure, a turnaround then in some of those lower end chips, and that stock rallied on the back of that. Looking ahead, we're going to be watching Germany's IFO Business Climate Index later today for clues about the state of Europe's largest economy. We'll be speaking to them. Markets Today is next. Stay with us. This is Bloomberg.